Ask Abby, providing answers, insights, and education designed to give you the tools and knowledge you need to thrive financially and live confidently in retirement.
And welcome into the program, another edition of Ask Abby with Abby Reed of the Reed Financial Group, the retirement family, your resource, ladies and gentlemen, to help address the financial, the investment, the retirement-related questions, concerns, and challenges. Abby, always a pleasure to have you here as the resource with great information for us. Thank you.
Yeah, absolutely. Pleasure to be back.
Always. And ladies and gentlemen, before we get going, just to remind you, if you've got questions, if you would like to get your personalized written plan for retirement, pick up the phone and give the Reed Financial Group a call, 678-442-0255, or you can go to the website to submit questions or be in touch. GoAskAbby.com, GoAskAbby.com, as Ellen and Gwinnett did, and she submitted a question. Not sure I can or want to deal with market volatility or losses after last year. Are there any reasonable alternatives, Abby?
That's a great question, and one that we're getting all the time now, and we've been getting it for a while, but especially now, as we've seen really a lot of volatility last year, as we all know, more volatility than we've seen in several years. And so that's always kind of a shock to people when we come off of a long period of really good stock market returns. It sometimes feels to people like it's always going to be that way. And then bam, kind of out of nowhere, 2022 happens. So the good news is a lot of the principal protected, I would say safer options as far as volatility to your principal are back on the table more so than they have been in, 2 years ago, they might not have been even on the table. So we're talking about as far as principal protected options goes, CDs, even high yield savings accounts. So that's something that we're trying to educate people on, that it's an alternative to just a regular bank or savings account. So it's done by online banks, and these are big companies. So it's like American Express, Marcus by Goldman Sachs. Let's see, I think Citibank is the third highest interest rate right now. And so that's a really good option for funds that your emergency fund. So it's not money that's going to pay bills, on a monthly basis. That can needs to stay in your bank account. But your emergency fund, something that you don't need for maybe 6 to 12 months, or maybe you might not need it at all, but it's going to be there. That's a great place for that type of money. Anything that has a longer time frame, we can start looking at the other options out there that have what's known as terms. So it's limited liquidity in exchange for a higher interest rate. So with a high yield savings account, with bank accounts, savings accounts, those are liquid. You can take your money out at any time, which is beneficial in certain circumstances, but that's going to reduce the rate that you can earn on that. And so with CDs, fixed annuities, or MYGAs, as they're called, multi-year guaranteed annuities, if you have a little bit of a longer time horizon, so 2 to 5 years or so, then those are going to get you a higher interest rate. And also what it's going to do is lock in that higher interest rate for that term, which is a benefit, because if rates eventually go back down, maybe in a year or two, they go back down to kind of normal levels, you still are earning that, 5% or however, whatever the interest rate is. And so there's a benefit to those terms at this point in time. And then we have fixed index annuities. So the rates are fantastic on those right now, because interest rates are much higher than they were in previous years, which means more income can be generated from them, and it can be done in a safe way because it's principal protected. So there's a lot of options, and they're just getting more and more attractive.
Yeah, and great point there, Abby, that In certain circumstances, I think people are adverse to locking in money for extended periods of time. But when you're talking about attractive interest rates, that may very well be to an advantage. I'm certain, in the early 2000s, as interest rates were falling pretty quickly, a lot of people were pretty happy that they had locked in higher rates for a extended period of time.
Right, exactly. And so what I always think of is my grandmother. So she was widowed in her 50s. She had never been involved in the finances. My grandfather had his own business, and she was a homemaker. She took care of the kids, and that's what she did for their family. And so when he passed away unexpectedly, I asked her one day, how she lived until she was 93. So I said, how did you make it from 50 all the way to, at that time she was in her 90s? What did you do as far as your finances go? Because I wasn't unfortunately around back then to help her. But she said that she was reading the newspaper one day and she had gotten the life insurance death benefit. Thankfully, he did have life insurance because she really, really needed it. She found a CD at a local bank and it was paying like 19 or 20%. And she said, well, that sounds like a pretty good deal. So I'm going to go and put all of that in, the CD.
Absolutely.
And that was like probably 6 or 7 years ago that I had that conversation with her. And so at that time, rates were, even lower than they are right now. And so that just blew my mind. So that was a great deal for her at that point in time. But unfortunately, what happened is interest rates plummeted after that. And so those options weren't really there anymore. And so if she could have locked that in at that point in time, or at least for a little bit, that would be a huge benefit. So there's pros and cons. In my opinion, there's pros and cons to everything in life in general. So with a term, you have limited liquidity. So can be a pro or a con depending on your situation. But you also have that locked in so that if interest rates do go down, then, you still got a good deal. And if interest rates go up, we don't expect them to soar as much as they did last year. So it's kind of like, when is the best time to start one of these terms? We never know, when interest rates are going to peak. They might go a little bit higher this year, but it's still a really good time. And interest rates might increase a little bit, but we're pretty high right now, so it's beneficial to not wait and on the sidelines and try and squeak out that little bit of extra gain when you can find really good interest rates right now.
Yeah, if it's an improvement over what you're earning, why not consider it, right? And I guess the important thing there, Abby, is knowing what you want your money to do, because every place that you might put it, there's benefits, but there's also probably some drawbacks and disadvantages. But does this new placement, or any place you would consider, provide the advantages in the area that you need from those dollars? So if it's money sitting around that you might not use in the near future, but you also don't want to lose in the near future, interest rates are back up, attractive rates available. Give Abby Reed and the Reed Financial Group, the retirement family, a call if you'd like to find out, shop around rates, see if you could do better with some of your money. 678-442-0255, 678-442-0255, or you can visit goaskabby.com, goaskabby.com. Be in touch there. Ellen, thank you for submitting your question, and hope gives you food for thought and a good answer there. No, you don't have to continue to subject yourself to the volatility of the market. We don't know what the year ahead might bring. But Abby, I know that you help your clients manage it regardless of that risk tolerance and keep that long-term vision, the time horizon, and their goals in mind.
Right, exactly. And another thing to touch on before we wrap up is some of the portfolio still does need to be in a position of growth. And so it's really our job to help our clients figure out, okay, what needs to be allocated to more stable options and what is going to be longer term growth oriented. And so what we do is really figure out what your money's role is in the next phase of your life, and that's how we allocate things. And that's really retirement planning and income planning when you're in that phase of life.
Yeah, well, when we've seen inflation at 8, 9, 6-7%, whatever it is, even for a short period of time, that is significant, and we need our money to grow to keep up. So again, Abby, always a pleasure. Thank you for being a resource, giving us the great answers. And again, ladies and gentlemen, you'd like to be in touch, you'd like to get your written plan for your investments, for your retirement, for your financial future, pick up the phone and give the Reed Financial Group, the Retirement Family, and Abby Reed a call. 678-442-0255, 678-442-0255, or goaskabby.com.
Thanks, Peter.
Here to answer your financial questions, visit the website goaskabby.com for show resources and to submit your questions and get answers, or to schedule your complimentary financial investment and retirement planning strategy session. You can also reach out to Abby directly at 678-442-0255. That's 678-442-0255, or at goaskabby.com.
Investment advisory services offered through Brookstone Capital Management, LLC, BCM, a registered investment advisor. BCM and Reed Financial Group are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Third-party ratings and recognitions are no guarantee of future investment success and do not ensure that a client or prospective client will experience a higher level of performance or results. These ratings should not be construed as an endorsement of the advisor by any client, nor are they representative of any one client's evaluation.